You have $1,000 sitting in your bank account right now, and you know investing it is smarter than leaving it there. You have read the articles. You have watched the videos. You understand compound interest. And yet, you do nothing. Your hands hover over the keyboard. The transfer screen is open, but something inside you just will not let you press confirm. You look up at those numbers on the billboard. The market is moving. Money is being made. And somehow, you are still standing on the outside. That money just sits there, week after week, month after month. And if you are honest, it has been sitting there for a long time. Here is the thing that should genuinely shock you. That is not laziness. That is not ignorance. That is your brain doing exactly what it was built to do. And that design, the one keeping you safe, is quietly costing you a fortune every single year you wait. This is the moment most people never reach. The moment they stop blaming themselves and start understanding the real enemy. The real enemy has a name. It is called loss aversion, and it lives inside every single human brain on the planet, including yours. Losing $100 feels twice as painful as gaining $100 feels good. That is not opinion. That is neuroscience. Back in the 1970s, two psychologists named Daniel Kahneman and Amos Tversky discovered something that changed everything we thought we knew about money decisions. They proved that human beings are not rational when it comes to financial choices. We are emotional. We are wired for pain avoidance, not wealth building. Look at this brain, right here. This region and the part that processes fear and threat. This is what activates every time you think about investing. Here is the psychology behind this. Your brain does not weigh gains and losses equally. It weights losses far more heavily, every single time. That is why two people can look at the exact same investment opportunity and see completely different things. One sees potential, the other sees danger. The gain side of the equation never feels as real as the loss side. That imbalance is baked into your biology. You did not choose it, standing at that window at night, watching the city build wealth around you, and wondering why you cannot bring yourself to be part of it. The researchers spent years studying this, thousands of subjects. The results were consistent. Fear of loss is the single most powerful driver of financial inaction. Every crash on that timeline, every moment of fear, every period of paralysis, it follows the same pattern. The brain sees red and it shuts down. But here is what nobody tells you. The market recovered every single time. Every single time. The fear was real, but the danger was temporary. Deep inside your brain sits a small almond-shaped structure called the amygdala, and it is the reason you cannot click buy when the market drops. The moment you see that red chart on your phone, that downward line, your amygdala fires. It does not think. It just reacts. On the left, a modern investor watching a market crash. On the right, a caveman facing a predator. Your brain processes both situations identically. You are standing in the middle of a financial trading floor surrounded by noise and fear, and your ancient brain is telling you, this place is dangerous. Leave. The data shows that people make their worst investing decisions not when things are calm, but precisely when fear is at its highest. Freeze, retreat, protect. That is the biological response. It kept your ancestors alive. But in the financial markets, it destroys wealth. Most people walk around carrying this fear every day. It shapes every financial decision they make, and they have no idea it is happening. When your brain sees a falling stock chart, it draws an arrow straight to the word threat. That connection happens in milliseconds, before rational thought even begins. Look at the people around you, the ones who cannot invest, the ones who keep waiting for the right moment. Their brain is not broken, it is just afraid. And here's the thing. You cannot logic your way out of a biological response. You have to build systems that make the response irrelevant. Studies show that investors check their portfolios significantly more during market downturns than during bull markets. Think about what that means psychologically. Every time they look and see red numbers, the amygdala fires again. The fear compounds. The paralysis gets deeper. The checking becomes compulsive. One investor holds steady through the storm, the other panic sells at the bottom. 10 years later, their financial outcomes are unrecognizable from each other. That sell button, that single click made in a moment of pure fear, that one decision can cost an investor years, sometimes decades, of compounding returns. The real cost of financial paralysis is not what you lose. The real cost is the wealth that never gets built in the first place. Behavioral economists have written entire books about this phenomenon, and the conclusion is always the same. Emotion is the enemy of long-term investing. Look out at that city. Every building, every business, every piece of infrastructure, built with capital from people who chose to stay invested when it was terrifying. Financial paralysis does not announce itself. It does not feel like fear. It feels like patience, like waiting for the right time, like being responsible. The person frozen at that table staring at red numbers. That is not a bad investor. That is a human being responding exactly as evolution designed them to. But here's what nobody tells you. Evolution did not design you for financial markets. It designed you for immediate physical survival. Those are two very different games. The data shows something brutal. Missing just the 10 best trading days over a 20-year period can cut your total investment returns nearly in half. 10 days out of 7,000. That is how fragile the psychology of long-term investing really is. 10 days that most people miss because they were afraid. And here's the painful part. Those 10 best days almost always happen right in the middle of the worst periods of fear and market volatility. The people who stayed in, even when everything felt terrifying, captured those returns. The people who listened to their fear and sold did not. Real wealth is not built in the moments that feel comfortable. It is built in the moments that feel deeply uncomfortable, and you stay anyway. The opportunity cost of financial paralysis is invisible. You never see the money you did not make. You only see the account you have right now. One investor stayed through the fear. One sold when the amygdala fired. 20 years later, their financial lives look nothing like each other. Same starting point. Completely different outcomes. This is the brutal truth about fear and money. The cost is not loud. It is silent. It compounds quietly in the background while you wait for certainty that never comes. That curve going from flat to exponential. That is what patience looks like on paper. And most people never reach it because they exit before the curve begins. Sitting outside on those steps, thinking about time, about the years already behind you, and understanding that the best time to start was yesterday, but the second best time is right now. So what do you actually do about a brain that is biologically wired to work against your financial future? You remove the decision from your emotional brain entirely. You automate. You set your investments to run without your involvement. You put your phone face down, and you walk away from the daily emotional noise. The system looks like this. Paycheck arrives. A portion automatically moves to your index fund. No decision required, no emotional touch point, no amygdala involvement. The market can do whatever it wants. You are sitting at a cafe reading a book. Your automated system is working quietly in the background, building your future. The wealthiest long-term investors are not the ones who felt the least fear. They are the ones who built structures that made their fear completely irrelevant. Left version, checking every day, reacting to every dip, slowly destroying returns with emotional decisions. Right version, automated, structured, building wealth without even thinking about it. There is a version of your financial life that looks like this: calm, structured, moving forward quietly every single day, regardless of what the market is doing. Years from now, you will look at that portfolio screen, and you will see what patient, disciplined, automated investing actually looks like when it has had enough time to work. Your brain will always hate investing. That will never fully change. But your future self does not have to pay the price for your present-day fear. Smarter mind, wealthier life. That is not just a tagline. It is the only way this actually works. Understanding your brain and building systems smarter than your fear.